All right, awesome. So today we're going to start by doing a market analysis, seeing how the market is doing right now, then stock
Okay.
analysis. So if you have any stocks for me to look at, please put it in the chat. Trade simulation, meaning we go through like random stocks and try to trade it like we're trading in real time. And community stock portfolio, that's the portfolio I started last week. We're going to look at it and see what our next moves are. Also, yeah, okay, so let's get started with the market analysis, and I'm going to share my screen. Desktop. There we go. Okay. Okay. Let's get started. All right. So now, what is going on right now in the market? It is okay. So you mentioned Prabha. Am I saying
Yeah,
that right? Okay.
correct. Exactly.
You mentioned that
Yeah.
recently your stocks has been going up and you are making money. It's not a surprise because our market analysis have been saying that we've been in an uptrend for a couple of days now. Like for instance, in my Patreon and in my Slack group, I put like the daily market analysis, so you know what stage the market is in. And since let's see, uptrend since about what date was this? May 25th. So see, May 24th. Since May 25th, this is May 25th. Wait,
May 25th, 21.
25th, March, April, May. Yeah, we're in June, right? Yeah. So since May 25th, my signals say we were in uptrend. And as you can see, when we're in an uptrend, it's easier to make money. So this is why your stocks were probably making you money. We're in an uptrend still then. And even though this is pointed downwards, we are technically still in an overall stock market uptrend. And as you can see today, we're facing resistance over our all-time high. So this is an all-time high mark that the SPY tried to cross over, but of course, some sellers came in to bring it back down. But overall, we're still in an uptrend market. On the QQQ, which mimics the Nasdaq, you can see today we try to recover from bouncing back from our new resistance line. So again, overall, we're in an overall uptrend, and you can see it better in the weekly. Right over here. Just the past couple of weeks has been coming up. So we did not gain any distribution days today. So even though a distribution day is when the stock market closes down on more than 0.2% on higher volume than the previous day. We had higher volume, it closed up, but it closed higher, it closed lower than the previous day. That's fine, but it's negative 0.03%, which is fine. So today we did not gain a distribution day, but we do have 4 distribution days in the danger zone. We don't want to gain more, or else it might pull the market down. So, but we did lose 3 of them, gain 2, not bad. Same with the QQQ, we gained 3, lost 2, not bad. We have some good space here between in the danger zone. In the danger zone, we don't really want to get more than, let's say, 4, maybe 5, 6, or 7. If you get 7, definitely you want to move your stop losses up and just pray for the best, because the market is going to tumble most likely. So I know this is all gibberish for a new stock trader, but it will clear up as I keep going, because the more you hear these things, the more you just believe it. All right. Yeah.
Could you talk more about the distribution day, the distribution day again?
Sure.
You said if it's more than 2%, when it closes more than 2%.
Yes.
Is that a
So
hard rule, or it's just flexible depending on how much, what percentage it closes on?
it has to be either negative 0.2% or more. So let me go back in history and we can look at a couple of distribution days so you get used to it. Okay. Okay. So we'll
Okay.
start from somewhere here, right? So here was a distribution day. Why? It closed by. I'm pointing at the screen with my finger, like you can see where I'm pointing at.
I was like,
But
what are you pointing at?
look at this circle right here, okay? Where my mouse is, plus 0.89, right?
Okay.
So on this day, the distribution day, it closed down and by negative 0.36. This is more than negative 0.2. So it's counted as a distribution day.
Okay.
Okay. And okay, so this one was also a distribution day because it closed down by negative 3.44. That is a huge sell-off.
Okay.
Now that's on higher volume too. So that's a distribution day. Now I'm going to go to, hold on, let's see this one. Negative 0.4, higher volume than the previous day. This one too, it closed up, but negative 0.08, higher volume than the previous day, but it closed up for the day. It's still a distribution day because it closed down by more than 0.02% from the previous session.
Minus 0.2%.
Yes, you get it now, right?
Gotcha.
So here, negative 1.55%, closed way lower on higher volume. The higher volume is important because if it doesn't close on higher volume, it's not a distribution day.
How do we know the higher volume part of it?
The volume bar is higher than the previous one.
Gotcha. Gotcha.
Yeah. So let's look at an example if we can find one really quickly that okay, I can't find one quickly. That's fine. But I'm sure you get the idea.
I get it clearly now. I really
Okay.
get it now. Yeah. Thanks.
Now, the way I analyze the market, I don't just use the distribution day because that's some is probably that could be wrong 25% of the time. Just using distribution day counts, I don't just use that. So that's why you see my ratings of out of 5. I use 5 different ways of rating it. I use 5 different criteria. And out of the 5 plus the distribution day counts, I put all of that into consideration in giving my ratings, which you can find on Patreon and the Slack channel or Facebook or wherever else I post it. Make sense?
Yeah.
Okay, cool.
Thanks.
No worries. So we're done with the market analysis. Let's look at what do I have on my notes? Stock analysis. All right. So we're gonna go through some stocks. So I was just mentioning to Prabha that we're going to look over her stocks. So we'll go over to Investors Business Daily. And she wanted to look over Slat. No, what stock was it? Where's my notes? There we go. Shopify. So I use Investors Business Daily because it's just easy to use. It does most of the hard work for me, and you don't really have to do much digging. Looks like it's doing a search. Shopify. Ooh, is that a good price? Okay, so Shopify is 94, which is good, relatively. Relative strength rating is in the 80s, which is good. I would prefer it to be in the 90s, but 80s is fine. EPS rating, this is overall an okay, it's a good stock. So I'm going to look at the technicals and to see Seeking Alpha Shop. I'm going to see its earnings ratings and see if it has been increasing in earnings and growing in its earnings. Yeah.
Can we keep it and sell it?
I'm sorry.
Can I keep it or sell it?
On selling.
Sell the stock.
Oh, should I tell you? I can't tell you what to do with it, but I'll teach
Okay.
you how to trade. Yeah, like something that I've learned over the past is that listening to other people in the stock market will
Mhm.
actually get you in trouble. Like with your investing. So even from me, I am probably not right more than 50% of the time, and that's hard to do. So what is important in the stock market is not being right all the time. It's actually cutting your losses short when you're wrong. So far, it seems like this stock is very, very good. Actually, they've been increasing in earnings drastically, accelerating their earnings and been going up. Right now, we are in an all-time uptrend. Now, this is where the lesson comes in. So during an all-time during a sorry during a market uptrend, you usually want to buy stocks and not sell. During the market downtrend, you don't want to buy stocks simply because during downtrends, most stocks prices are going down. And if you buy stocks during that time, what's most likely going to happen is that you lose money naturally. During an uptrend, most stock prices are going up. So if you buy a stock during that time frame, most likely you will gain money. Very simple concept, I hope. So with Shopify, it looks like they are extended on the daily. It looks like they're very extended. As you can see, this is the Bollinger Band, and it's squeezed. They had a good shot up with increase in volume, but it looks like they are way outside the Bollinger Band. So they may be a bit extended right now. So I wouldn't buy in, but if I was in the stock, this is just telling me if I was in the stock, I would set my stop loss. I'll tell you where. Give me 1 second. In the daily. Okay. Whew. This is a wonderful stock. I love it. It's worth 1,000. Am I looking at the right stock? Shopify.
Shopify.
Yeah.
Wow.
They've been doing well.
Yeah. Let me see if they've more than doubled within the previous year. Okay, so let's just see from here to the highest point. Okay. So this stock in the last 52 weeks has not doubled. So it wouldn't be a stock that I would buy. Just because it doesn't fit my criteria. Do you have a question, Dan?
Yeah, I was gonna chip in real quick about and I think we talked about this before, that when the stock is typically when it's going low, that's when you buy, right? That's the only thing that I know.
When
It
the
kind of
stock is
works
going low.
when it's a downtrend, my bad. When it's a downtrend and it's getting cheaper, that's when you want to buy, right? That's kind of the knowledge that I have since doing this stuff. So and I understand that when it's an uptrend, when you buy it at a point, it keeps going up, which makes sense. But if you buy it at its lowest point and then there's an uptrend, there's a lot of possible gains there, right? Do you think there's a wiggle room? Like, is there a way you can blend that? Okay, buy when it's going up in the uptrend, but also what if you can buy when it's at its lowest point, then ride the
Uptrend,
curve upwards?
So I have a question for you. How do you know where the lowest point is going to be?
That's you have to get a magic genie at that point.
Yeah, exactly. Okay, that's one problem. You don't know where. I mean, don't get me wrong. Some people use that strategy and it works for them, but it doesn't work for them if the stock is in a stage 4. So this is why stage analysis is very important. If you have a stock that is correcting, but in a stage 2, that is a good sign. That means it's just correcting and you can buy at the turn point, where it starts to turn. But if your stock is in the stage 4, you don't want to buy, simply because it is going down in price. And when I'm done with this stock, I'll show you the difference of that. Okay. So let's looking at this stock, right? Okay. Here, let's look at this area of the stock as an example too. I'll answer your question in a sec, Prabha. So we'll get there. I just want to clarify something for Dan. Okay. So looking at this stock, let's look at the weekly. Remember stage analysis? Whoa. What the heck? Oh, Shopify, is that new?
No, they've been around.
Yeah, for quite a bit. Yeah. Wait a second. Okay, I'm probably scrolled too far. Oh, okay, there we go. Okay, so let's take the beginning of Shopify for a second, right? Now we're looking at the weekly. So if we look at the daily, it'll be even much more different. So let me pull out the daily for you and explain why. Oh my Lord, this is okay. I need to zoom out a little bit. Explain why stage analysis is very important. So we'll go all the way to. Okay, it just keeps going. Okay, there we go. Okay, we'll go all the way back here, right? Now, why is stage analysis important? Imagine we couldn't, when you're trading, you're going day by day, so you can't see when the market turned, right? So let's say we came into this stock and we missed this. I'm not saying that it's a good idea to buy then anyway, but we missed this and we're right here, right? And stage analysis, let's say this is the weekly time frame or whatever, and it's trading below the 30-week moving average. So when you thought this was the low, so you bought it, and then it went up a little bit and it went lower, and then you were like, this is probably a low, so you bought it. Or you noticed it started going up, so you bought it, and then it started going lower, and then you thought it was going up, and then it went lower, and you just don't know where the low is. So yeah, that's just the problem with trying to catch a low. Plus, this stock is in a stage 4 downtrend, which means this is not in the weekly time frame, but I'm going to talk in terms of weekly. It's trading below its 30-week moving average or its 150-day moving average. So you never want to buy a stock in that stage, because this is what happens. You will lose money. Now, take that versus the difference when it starts trading in a stage 2. So right now, stage 4, now we're in the stage 1, and we enter the stage 2 where it's trading above the 30. I'm going to use the word week, okay? 30-week moving average, just so we have more data. Now, you see in the stage 2 where it's trading above the 30-week moving average, you buy, you're going to make money because it's moving in an uptrend. Do you see what I'm saying? So now it's in a stage 3, and it went straight down to a stage 4 where it's trading below. So, okay, right now is deciding where to go. So let me give an example of a correction during stage 2. So keep going. Okay, so we're right now in stage 2, trading above, and the stock, let's just keep watching what happens. Stage 2, stage 2, stage 2. All of this still trading above the 30. I'm gonna say week, even though we're in the daily time frame. 30-week moving average is still in the stage 2, so we're good. And as you see, when it's in the stage, we make money. We don't. This is why we don't want to. Okay, so now right here in the stage 2, we dip down. We are still in a stage. Actually, right now we're in a stage 3, since we're like trading above and below the 30. I'm gonna say week moving average, right? So let's see what happens. and you can see the change happening. Do you see that? Like it's clearly changing from a clear stage 2 where there's space in the middle and it's going up and up to a stage 3 where it's curving into starting to trade above and below. Then it's gonna start trading below the moving average. That's a stage 4. You typically don't want to trade a stock that's in stage 4. I call that Armageddon. Okay, Bollinger Band squeezes. When Bollinger Band squeezes, it means the stock is ready to make a drastic move. It could be up, it could be down. In this case, it was in stage 3, entering in stage 4, and recovery. Nope, downtrend. Now, you can argue, okay, we can probably find the low of this. Let's see, where is the low? When you're going day by day, where is the low? You don't know. So why take the chance? You see what I'm saying? Just like
Yeah.
what happened in the beginning of the stock. In the beginning when we tracked the stock and it was just going low, we thought that's the low and it keeps going low. We don't know. So we don't want to take the chance and risk our hard-earned money. So we want to buy a stock when it's in the stage 2. Like if it's in the stage 2 and it corrected right here, and you wanted to find a low during a stage 2, but it's clearly in a stage 2, why not? Overall, the stock is still gonna go up, or is going up, but right when it crosses into the stage 3, going into a stage 4, which is when in the weekly moving average, in the weekly time frame, is trading below the 30 moving average, or is trading below the 150-day moving average, then you don't want to get into that stock. So let's see. We had a quick correction below that, and now we went going through our stage 1 back into a stage 2. Let's see what happens. And this is stage 1, you don't want to buy. Stage 3, you don't want to buy. You only want to buy a stock when it's either in the beginning or it is in a clear stage 2. Now, you can argue that, okay, we can buy this stock now or whatever, but it's going sideways, which means you're neither making money or losing. Like, yeah, you may lose, you may not, who knows, depending on how long you hold it, but it's going sideways. So all this time from October or whatever, you're losing money because you're not making money. There's a time factor that you're wasting your money. Time is money. And now,
Can I ask a quick question about the correction? I hear you say correction. I'm not sure. I don't know what correction mean when you say correction.
okay, great. So a correction would be when so when there are too many buyers and the stock becomes overpriced, there's gonna be a correction that happens that corrects the price. So let's go to most recent, because if I remember right, you see how this stock goes straight up, it shoots straight up. This is called an overextension, like right here, how the stock just shot straight up. But it means at some point it became overvalued, which means like that's not the real worth. It doesn't really correlate with the financials. So it doesn't correlate with the real worth in the market. Like at some point, the buyers are going to be like, wait, I've made money on this stock, and it seems it's not at a price I'm comfortable with anymore. So I'm going to sell it. And a lot of institutions are going to think similar to the same thing. So they're going to sell it, and it's going to go into a small correction. Meaning it's going to come down a little bit to get to a price that institutions are comfortable with buying again. And when they're comfortable with buying again, it goes back up. So believe it or not, corrections are necessary for the stock to continue moving up. Make sense? Hopefully. Yeah.
I mean,
Oh Lord, I didn't explain it right.
no. It makes sense. The explanation was correct. It makes sense to me, but it just doesn't make sense to me why they would have to do corrections to however much it's sold at the end of the day. You know what I mean? Like who has the, I guess, is the rules of how the game works, how they're supposed to make sure that it's not over it's
Value.
not overvalued exactly. And so then, it would become like penny stocks where like, well, you have so much, but you can really get much value out of it. And so I
Yeah.
can see that the correction is kind of trying to save that situation.
Yeah, so the market decides the price of the stock. So it's a bid and ask thing. So I'm going to ask to buy it at this price, and are you willing to sell it to me at that price? Um, so so what am I trying to say? So at some points, we're not, since it's a ask and bid thing, it's not going to be correct all the time. Like we can keep just like right here. You see this overshot, like it just shoots straight up and becomes clearly overvalued. Like the market didn't agree that the price of the stock should be all the way here. So what happens? They start selling to take their profits, and then yeah, and eventually they're going to come to a point that they're like, hey, this stock has gone way too low. I think it's a good place to buy, so let me
Right,
buy. And then it starts
right,
going up again.
right, right, right.
It's a simple buy and sell and supply and demand thing. Like there's not really much logic more to it. And if you try to put more logic to it, that's generally when you start being wrong and making a lot of mistakes in the market. Like for instance, you could say this move happened because it's happening. I didn't say it happened, but it's happening because of this event that happened in the news. You don't know that. That event could be completely unrelated. Like
Yeah,
could be, could not be. I don't know. All I know is that there are more buyers than sellers, and there are more sellers than buyers. That's it. Keep it simple. Like don't
yeah.
overthink.
Like a classic example, and not to keep this extended, but with the what happened with Ronaldo with the Coca-Cola,
And
whatever.
mm,
I'm not sure if you heard about it when he was supposed to do like a little presentation or a little conference, and they
mm.
had, like soccer players, they usually have like products in front of in front of their desk or their table where they're gonna sit and
Yeah,
talk,
he moved it out of the way.
and their stocks plummeted in billions.
See, like now at that point, I'm sure, okay, the stocks
Coca-Cola,
plummeted, I'm sure, but hey, who's to say it won't, that plummet doesn't, like probably some people wouldn't agree with that plummet, and it's gonna probably shoot back up because that was just a false, you know what I mean? People trading according to the news never really, it doesn't really work out. Like,
correct, correct.
yeah. So back to Prabha's question about Shopify. Would and I'm saying I hold on to this stock. This is just my opinion. Now I'm not saying to do this. This is not advice. This is just me genuinely trading the stock. So I would say I would I would set a stop loss on the stock so that if I've made money on it, I am not going to lose money. Um, around here. Now, looking at this stock, it looks like it has a history of shooting of like drastic movements within a month. Give me a second. Give me a second, guys.
Yeah.
Okay, looks like this stock has a history of of shooting up and dropping back down. Like even just looking at the recent 1 year time frame, it has not doubled within the year. Uh, it has only gone about 60, 70, 80%, which is good. But it's not still 100% for me. So I personally would not get into the stock, but that's a personal opinion. Um, in the first place, so it has good financials, or fundamentals. It has good fundamentals, and it is a bit overextended. So for me, I would set a stop loss, which means the stop loss is like I would you either buy and sell when you're not directly watching the stock. So when it crosses the line, it will automatically sell, or when it crosses the line, it will automatically buy. And if I was already in the stock, like let's say a typical buy point for me would be up here or like over here. If I was in the stock and I bought over there, I would set my stop loss over here and say, hey, let's play the waiting game. Let's see if it goes up higher. And if it goes up higher, I'll move my stop loss higher. So I'm not using my emotions to trade. I'm not holding on, hoping that it keeps going up. I'm clearly seeing what's going on and making my decision ahead of time and letting the computer handle the rest. So if I was to buy this stock too, after a correction, I'm sure it will correct sometime. I would buy it at an all-time new high, not at a low. So apparently this stock is doing good. Would I go in it? It doesn't move the way I like, so probably not. So let's see, Coca-Cola, you miss Coca-Cola. You miss it. How do you spell Coca-Cola?
That's it. Coca. Yeah. COKE.
Coca-Cola. There we go. I can't believe I had to have help with spelling Coca-Cola. That's ridiculous.
Well, you spell the one that's coming from Colombia.
Okay, no one saw that. No one heard that.
You got it.
Okay, so I know this Coca-Cola stock is a good one for Warren Buffett. It's his favorite, or one of his good ones that he likes. So history, first of all, would I invest in a Coca-Cola? Hell no. I don't trace like Warren. But look at what I'm talking about. On the daily, right? Okay, so I'm guessing Ronaldo's movement was somewhere around here. And this is like a, let's say, a 10% movement, which is not bad, which is typical. So at this point, I would say that was a normal movement, bro. Even if it's because of what happened in the news or whatever, it's still in a clear stage 2 uptrend. It wasn't anything unexpected. It looks like it's settling on its what's it called, correction. It looks like it's settling. Huh?
It could be negligible.
It could be it most likely is. Anything by the news is most likely negligible. The market would act in a quick like panic, or the market will act in some way, but it will always recover if it's like by like negligible news. This isn't like devastating news like the CEO got fired or died, you know what I mean? Or there's been, you know what I mean, something drastic.
Something drastic. Yeah,
it's whatever. But as you can see, how I would read this, I wouldn't even put what's his name, Ronaldo, as part of the equation. I would say, hey, look, the market agreed with this price. People were buying it, and now it got to this price, and the market didn't agree, so they sold it. Simple. I don't want to put any other things into it, like news or whatnot. All right, so next let's look at our portfolio, how it's doing. You can see right here, this is the public thing account I started last week. So we bought around at this price, and we set our stop loss at 10% lower. So let me actually read this. So we set our stop loss at 10% lower, and we didn't get hit yet. Now, what is the market going to do? I do not know. But I know for a fact that our stop loss didn't get hit yet, and we're still in a stage 2 uptrend. Now, if this stock bounces a little bit and establishes this as a base, I'm definitely gonna move my stop loss at least here. Now, if it gets to my target point of moving my stop loss to break even, I'll move it to break even. But for now, I'm going to keep things as it is. Matter of fact, uh, we did lose a little bit, but we started at 10,000, but we lost under $100. That's chump change, you know? So this is the way I like to trade. Remember, we wanted to own about 50 shares of this stock, and we only bought half of what we wanted to own at first. So I'm mitigating my risk and how much I could possibly lose. Now, if this stock keeps going lower, I'm going to automatically sell here and only lose about $229, which is not bad. It's not bad at all. It's actually quite a good trade because I was wrong and I didn't lose money. Yay, I'm happy. I didn't lose much. And I could jump into another stock that's going up. So we're going to leave this as it is. Looking at it on the weekly, it's easier to see that we are in a clear stage 2 uptrend. The purple line is the 30-week moving average, and you can see that it's having some trouble getting through this point. Like we broke through and we sold off. That is not a good sign, but I have my stop loss set. I am fine. I made that decision. I'm not going to move it until it gets to my point to break even, to move it, and then I'll move it. And we have that in the Excel sheet that I posted last week. I made that private, by the way, because I need to start raising money for this company. So I'm not just going to make that public anymore. So anyway, moving forward, we also looked at the stock, and we saw that it was past the buy point. So we're not going to, it's in the middle of a move. So we're not going to buy it yet, but it's in an all-time new high spot, which is something I like. And yeah, it has to. Okay, so this is why correction is important. Do you see, we have no opportunity to get in the stock right now because we could buy it and then it starts correcting and we lose money and then we sell and then we panic and all of this. Avoid that. Wait for the stock to get to a position or a way that you like, and then you buy it. So right now, I'm not comfortable with buying in right now because we may have a correction soon, and the money I am spending on it whilst it's correcting, is being wasted because it's not growing. Simple. It's not in a stock that's going up. It will be in a stock that's going down. So it's wasting my time and money. So what I would do is to wait for it to correct. And when it starts coming back up and I see a good prime opportunity to buy back in, that is when I buy in because it's making me money at this point. Hope that makes sense. All right. That is all of the important stuff. Now we can just go through some trade simulations. And if you have any questions, this will be the right time to ask before we get into it. Or if you have a stock you want me to analyze or trade with the simulation. No. Okay.
When you look at the distribution days,
Yeah.
do you switch back into weekly, daily, or hourly?
No, distribution days. So daily time frame for the distribution days.
Oh, okay. I'm trying to look at what we have here, and I'm trying to.
Okay.
So those are the ones with the lines on it. Okay, I think I see it now.
Wait, are you talking about this stock?
Yeah.
I don't typically track distribution days on individual stocks, though it is a good idea. But we can have some practice with this one. How about that?
Yeah, sounds good.
Okay. Let me go to pointer crosshair with data box. Okay, cool. So first of all, distribution days, it has to close lower on negative 0.2% and on higher value. So let's look for a day that happens. Nope. No. Okay, so this one is higher volume, negative 1.8%. Would you say this is a distribution day?
No.
No. Why not?
Is it? It's not. It's not 2%, minus 2%, but I guess the volume is
minus 0.2%, not minus 2%.
Sorry, minus 0.2%.
Yeah.
Oh, my bad.
Exactly.
I was doing 2%.
Making up your own numbers. And it's on higher volume. That's the important part. See, higher volume than the previous. This volume was 1.6 million, and the previous day was 1.2 million. So it's a distribution day.
Gotcha.
Now this one, first of all, is this one a distribution day?
No,
No,
No, why not?
because first it doesn't have the line on it. Number two.
Yeah, I marked them lines.
I learned visually. Okay. And number two, it's not 0.2%, minus 0.2%,
What is it?
minus 4.86.
Is that more than 0.2%? Negative 0.2%?
Oh, look at me. What am I doing?
Yeah, look at you. Okay, this is volume of 1.3, and the last one was volume of 1, so it's more volume. It is a distribution day.
Oh my God.
You said because the mark is not there. That's a good one. I like that. All right, now this one might be tricky. How about this one?
they all are distribution days.
Yeah, that's
Awesome.
and
I
that's
see Ravi is familiar with the distribution days. Let's go. That's good. Okay, so
Excuse me, I'm not familiar. Understand you must be using IBD system here, right?
yeah, he wanted to learn what distribution days are, so we're going over that. Yeah.
Okay.
Um,
No. My question about you are using IBD system, so I need to go brush up on my IBD thing, but I know where you're coming from. Go ahead.
Cool. So yeah, the distribution day count and whatnot is from IBD. Again, analyzing the market, we use that along with other criteria to analyze the market because I found out it's not too accurate most of a lot of the time, not no. A minority of the time it's not too accurate. So we add in some other criteria to fine tune that. And for as far as individual stocks, I don't use distribution days to trade individual stocks personally, but if you want to, all power to you. So we're going over that now. How to do that. I mean, we're just going over how to find distribution days. So just by looking, I can tell this is a distribution day because it has higher volume. It closed down quite a bit, negative 0.5. Cool. Let's look for one that might be confusing. Is this a distribution day? Daniel.
yeah, he's not here. It is a distribution day, but I'm
Why?
looking at the volume.
Exactly. You're looking at the volume, which is the right choice, right thing to look at. It is not, it didn't close down on higher volume.
Mhm.
So it is not a distribution day.
Even though it's
Yes.
so it has to satisfy those two criteria.
It has to. Yep.
Okay.
Give me 1 second. My Mac is dying. If
And
it
how-
doesn't have higher volume than the previous session, then it's not going to be a distribution. No.
And how do you determine the volume again? I just wanted to.
These bars down here are volume. Is volume bars. So
How
like
do you know it's more volume?
so you see the red. I was about to point with my finger again. Like that makes sense. Okay, so I can't move my mouse or else it will disappear. So
Okay.
you see under the top section, the next one
Oh,
says
where it says volume 2.0
Yes.
million. Okay.
so 2.0 versus 2.6. 2.0 is lower, not a distribution day.
Ah, I see. Gotcha.
Okay, cool. You can use distribution days to track. Does it work when trading individual stocks instead of analyzing the market? I am not sure because I haven't used it that method to trade, but we can check using day by day trading. You want to try that?
I'm all up for it.
Okay, let's wait for the stock to go in an uptrend, and then we'll start counting it. Okay, so let's say we start right around here. Yeah, okay. Cool. Let's mark a couple of them. First of all, distribution days work in a 25-day frame, right? So let's count 25 days from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. This is the first important time frame. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Second. This is starting to look familiar, isn't it?
Mhm.
Like from my how I from tracking the market thing. Okay, so first look for distribution days. This is gonna be one. Yeah, negative 0.3, good. Volume higher. This is gonna be another going into the less significant zone. Volume higher. This is gonna be another. Yep. Wait. Negative 0.4. Yep. This is going to be another. Great. Okay, so we see that we have about 1, 2, 3, 4, 4 of them on in the stock so far, and one of it, 2 of them are now in the less significant side. So, like using that method purely to trade, I would say this stock's uptrend is not yet gonna be over. Just using that method, I don't know, but let's see. Keeps going, huge buy day, and you have to move everything forward. But let's not bother with that until we get another distribution day. Using that method, you would hold. Okay, huge sell off. Not even by 1.01%. We're fine. Not a distribution day. Buying, buying, buying. I like this. Okay. Somehow we skipped 2 days, but that's okay. So we had this day and then we had a sell-off right here. 1.3 mil, 0.55 distribution day. And then count 25 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so it seems like this stock had a good run without having a distribution day, and this is in a less significant zone. This one's out of the running. So let's look at this 3. This one's getting out of the running. So this is a pretty stable, strong stock right now. Nope. Nope. So as we trade this stock, you notice how distribution days play into the downtrend of a stock or the market. So it keeps going. We didn't yet have a distribution day, and whoops. There we go. Yeah, see, we didn't gain a lot of distribution days, and this stock just refused to go down. Okay, let's step back. So distribution days also sometimes depend on how much it dips down. So as you can see, distribution days are very, very healthy for the market as long as you don't get too many of them at the same time at one point. So you can see we went all this time without a distribution day, like a full month and whatever, and this happens because the stock just the market wasn't having it. It said, nah, you need to have some distribution days. So the climb down or the drop down was much more drastic than it normally would be. Does that make sense?
Yeah.
Yeah. So when I don't see distribution days for a long time, I get scared because that's not healthy. It's like going to the gym constantly without any breaks, like 20, I say 20 hours a day or 16 hours a day in the gym. That is not healthy. That's bad.
You bulk up pretty quickly.
Keep that up for a long time. You'll be in the hospital pretty quickly too. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's like binging, you know what I'm saying? So we had a long time without a distribution day and we felt the pain right over here. Uh, at this point, like we probably see a lot more distribution days. This wasn't counted as a distribution day, but it it yeah. And we felt the pain again. So this is just a drastic movement over a drastic movement. And we start to regain. So yeah, so to compensate for the however long we didn't have distribution days, it's making drastic movements to correct that problem. But yeah, overall, then we start having distribution days. So yeah, I don't use distribution days to trade, simply because right when I make a buy, I set my stop loss and then I move my stop loss up. So there really is no point of me tracking distribution days on an individual stock because I would sell out before drastic movements happen like this one. I hope that makes sense. Yeah.
Okay.
Doesn't make sense why I don't use it to trade a stock. Like,
Yeah, I mean, you have like almost 6 criteria, so it's bulletproof. This is one of it.
yeah, so yeah, like no, I use that to trade. I use it to track the market, no doubt. But like for individual stocks, when I buy in a stock, I use a stop loss. And a stop loss, I just keep moving the stop loss up and moving it up, depending on if it hits a point that I gives me opportunity to move it up. And like at that point, tracking a distribution date for the individual stock wouldn't make sense because I'm not going to wait for it to gain 7 distribution days within 25 days and all of that. Blah, blah. I'll probably be sold out by the time it starts drastically tipping over. Maybe I sell on its way up and a lot of the times, or I sell when it starts coming down. So yeah, I don't see a point in it when you're trading individual stocks. But that's just me, my opinion. Everyone's different.
How often would you move your stop loss?
Good question. So there are two ways I do it. I move my stop loss, one, through visually, or which is typical for me, or two, based on, like, some other professionals will move it based on percentage. So like every 10%, they'll move their stop loss up, so to make sure they cap at least 10% of their profits. So, and I think personally that makes more sense than what I do, but everyone's entitled to their own opinion. And I know what I say sounds contradictory, but it does make more sense, because think about it this way: most stocks will move at 10%. If you know how to buy a stock, you can buy a stock and it will move up 10% most of the time. So buying and selling a stock that moves at 10% at a time, you can buy a stock, make 10% on it, sell it or whatever, move up your stop loss, buy another stock, make 10% on it, buy another stock, make 10% of it. Eventually those 10% will come up to make 100%. And that is a very reliable way of trading. Makes sense. Yeah. So and it's not risking much. Like some people will buy a stock and not set a stop loss and just go on their hopes and dreams, and that usually does not work. So like for me, my strategy, sometimes I do use that strategy, but I never hit the sell button or market sell. I never say, hey, sell at 10%. I use the stop loss and move it up to to opportunity. Like for instance, if the stop, like right here, if this low is kept for 3 days or more, I will move my stop loss over there. So, let me use this slide. I'll move my stop loss here if it keeps this low for 3 days or more. And then it will move another point where it dips down, and then it keeps that low for 3 days or more, and I move my stop loss right below there.
So instead, as opposed to sticking to like a 10% rule, you're sticking to how many pennies can I make? How many pennies can I make if I move it this inch? You know, how many, like it makes so much sense because you have more flexibility. You know, you're not really abiding to a certain rule. That's really hardball. So I mean, it makes sense to me what you're doing because I used to do that too. I used to say, okay, you know what? I'm gonna wait till it goes up a little bit, like 43.91. When it gets to 45, then I'll put it below 45, like put it below 44 point something, and then I put my stop loss there. So is that right? Is that a little bit of what you're doing there?
Let me show you an example, right? So we'll start by saying, okay, let's say we bought the stock somewhere. Okay, let's say we bought the stock at a high, right? Over here. Here, let me do this, cover this, and I'll show you an example. We'll go a bit of it. We'll go a bit in the future, so you know how my strategy works. So let's say I bought this stock at this high or at this all-time high or whatever. I calculated 10% and my stop would be somewhere here. Let's just say that, right? So right now we'll follow the stock, and I'll show you where I'll put my stop loss. I didn't yet get sold out. Bollinger Band is squeezing. When the Bollinger Band squeezes, it means there is going to be a drastic move one way or the other. I've noticed that this depending on where I bought it. So let's say I bought it at the high here. This will be a ceiling. So I want my stock to break over the ceiling and stay above the ceiling. Right now, I broke over the ceiling, and this is right now my low. So let's keep going. And it's above that. So right here, I see an opportunity. This low has been kept for 3 days or more. So I'm going to move my stop loss right below here, which is right below my ceiling, or I can move it right below my ceiling. I choose it right here because it gives a little bit more space for the stock to grow, since I am in positives. Since I've made money in the stock already, and I'm in the positive time, and I'm in the positive amounts in the stock, I'm okay with giving it a little bit of space to do its dance. So let's keep going. Now I see another opportunity. You see this low right here, right? It dipped down a little bit. So let's see. It kept it for 3 days or more. I'm going to move my stop loss right here. Keeps going. Okay, so at this point, it's gone through another phase, and it's seen an up. It sees like there's a all-time high here. Now, this could be opportunity to buy more stocks, and I'll show you why in a second. But at this point, I wouldn't necessarily move my stop loss. So it's kept this high for 3 days or more. So what can I do? I can buy more shares up here. This is called the Darvis method. Now, there is a refined version of this method, but for now, let's use it. This is called the Darvis method. I could buy more shares at this high when it crosses over. But check it. How I buy, I would actually buy more shares at the top of this green bar right here. This is how I trade. So let's see what happens. Bam. Okay, so depending on if it keeps this low for 3 days or more, I will move my stop loss out. Right now, we would have been buying using the way I buy. And we would have been buying using the way Darvis buys. So I'll move my stop loss. Let me color it red so it's easier to see. So I'll move my stop loss over here. So right here, by now we have secured a good amount, right? So I'm okay with, I'm playing with this stock right now because I've made money on it and everything I'm doing is profit. So I'm just like jumping in the field, letting it fly, give it room. But we're bought in right now, and I showed you where I would buy it and whatever. This is where our stop loss is, and we bought more shares because we buy more shares when the stock has proven that it's doing what we want it to do. If it's not doing what we want it to do, then I'm not buying anymore. I hope that makes sense. So far, it's making us money, so it's doing what we want it to do. So I buy more. So it's up, and it's kept. So it broke this ceiling, and this low was kept for 3 days or more. So I'm going to move my stop loss here, capturing more money. And it's broke through that ceiling. I'm going to move my stop loss here. So so I basically do it visually when I'm in the profits. When I'm not in the profits, you best believe I am not losing more than 10% at a time. Like that is a hard fact. More than that, I sometimes even limit it to 5% depending on the stop. But we're in a good profit zone, and we haven't sold out. Have we sold out? Very close, but we didn't sell out. So I'll keep my ground, and we sold out. Does that make sense?
Yes.
Okay, so I move it visually, and I
Okay.
usually don't trade on the daily time frame. I'm trade on the weekly time frame because it gives you more of a smoother ride than a daily. Like in this daily, I would have bought sold a lot so many times along the way. By using my method, it will be so simple. I would be here, then I'll be here, then I'll move it here, then I'll move it here, and it's clearer. There's less buying and selling. Then I'll probably move it down here, and then bam. Well, I don't know if I would catch it over here or not, but it will probably, here's more realistic. In real time, I'll probably catch it over here.
Okay. Mhm.
So in trading on the weekly, you would make a lot more at a time, but you are in the stock for a longer time period. But on the daily, I would have bought and sold multiple times along the way. All right, I hope this was a good session for you guys. It is 8:08. I am getting tired. You know how it is. It's time to log off. We'll take a brief look at how our portfolio is doing right now. Again, as you can see, I'm trading on the weekly. So let's see how the stock is doing. We're right now in Yeti, and what concerns me about Yeti right now is that we did break into all-time high, but we immediately sold back under. That is concerning, but not a huge deal right now. The way the market is going is expected because in the recent few days, I cannot attribute that move to a Yeti problem because the whole market had to sell off 2 distribution days on the QQQ and also 2 on the SPY during those 2 times. Now, do you see how the market and individual stocks are related? And you really want to only buy stocks when the market is in an uptrend or in a stage 2. Because as we got the distribution days, even a stock that I owned also sold off. Like, is that a surprise? No, because what does it mean? For the market to be in a downtrend, most stocks are going down. Simple. So right now I see the 30, but the 150, this is the 50 day. Okay, the 30 day is leveling off. Is that cause of concern? I do see we have gone through a resistance to an all-time high, so we may be battling with that. Are we going to dive down? I do not know. But I know for now, at this point today, the analysis gave it a 5 out of 5, and we don't have enough distribution days to pull us into a downtrend. So my verdict is, hey, we're not in a downtrend. Why would I sell? Simple. I don't want to overcomplicate it myself because I don't know what's going to happen tomorrow. I don't know what's going to happen Monday. I don't know what's going to happen next week. All I know is that right now, my decision It's set. And if I'm wrong in that decision, and trust me, I'm wrong a lot, I don't lose much because I have my stop loss set at somewhere comfortable, period. And I'll make up that money that I lost easily. Like in another stock, again, I set it at 10% below. All I need is 11% return to make back my money and break even, which is very easy to do. Because as I mentioned before, almost every stock moves up 10% at a time. Easy.
Abdallah, could I ask you 2 questions, please?
Yes.
All right. This is my first time here, so therefore I'm not quite sure. Okay, what are your primary stock analysis methodology? Is that IBD combined with something else, whatever?
Yeah. So first, I would to analyze individual stocks to make it easy and simple on myself. I do use IBD
Okay.
to look at the stocks, and then secondly, I look at the 1 year time frame and see if it has at least doubled or more. So as you can see, Yeti is one of the stocks I trade because within a year time frame, it has more than doubled. So it's a good criteria. But IBD, like I don't want, and I also look at the earnings to make sure the quarterly earnings are increasing and accelerating and increasing. And I also look at sales, make sure quarterly and yearly sales are increasing and accelerating in their increase. And if all those criteria fit, we're good to go.
Okay, my second question is, what are you primarily focused on? Is that individual stock, the ETF?
Oh, individual stocks all the way.
Okay.
Like, would I trade an ETF? Unless it's like a leverage ETF when like let's say if we're in a strong downtrend, or I notice that a downtrend is going on, I do not short. So I'll probably buy like an inverse ETF, like the SQQQ. But I rarely do that. You can even say for a fact that I basically don't do that. I only buy during uptrends. I don't like to deal with shorting. It's very dangerous. It's very scary, and I ethically agree with it. So I just don't do that. But hey, to each their own.
Thank you.
Yeah. So I hope this was helpful. I would greatly appreciate it if you guys want more like content or help with what I'm doing. I'm trying to raise money to get my company off the ground, and the company is designed for you guys. It's a social media platform for stock traders where you can check the credibility of someone's background and how well they do over time. So it will help if you guys want a little bit of the value that I have to offer on Patreon. I'll put in the chat, and you can take a look. And if you like what I have to offer, please use my services. It will help you. It can only help you. And if it doesn't help you, I'm sorry about that, but I'll put that in the chat. Yeah.
It will help.
Huh?
It'll definitely
will.
help.
Yeah, definitely. Like my goal is to get everyone, wait, hold on. My goal is to get everyone making at the very least 30% per year, at the very least. If you're not making that, I failed. So yeah, there you go. It's in the chat. If you can sign up for a Patreon, please do. It will help me raise the money required to develop my website and stuff. So yeah, thank you, everyone. And
Thank
Thank
you.
you.
Thank
yeah.
you.
You're welcome.